Hey everyone, and welcome back to the video. In today's video, I'm going to be talking about my favorite investors to sort of follow and learn about. And we're going to break this video down by talking about a bunch of different investors. I'm going to talk about what their investing style is, or what their investing style was if they're no longer around, and sort of why I like and dislike that investing style, and what I particularly like or dislike about them, whether that's investing related or some other kind of relation, and then also how you can go out and learn about each of these investors. What are some of their books, and what are some of the books that have been written on them, and sort of videos and that sort of thing. So that's what we're going to get into in today's video. If you do enjoy it, make sure you leave a like and let me know your thoughts on it down in the comment section below. But for now, let's jump into it. So the first one on the list here is Benjamin Graham. How very appropriate. So Benjamin Graham is basically known as the founding father of value investing. He was the first very successful investor. He was a very successful investor throughout the Great Depression, making massive returns. And he was really one of the first people to write a substantial book on value investing. And he wrote a couple of different books. He wrote one that was called Security Analysis, and this was a textbook that he used to teach at Columbia University. And he wrote another one that is supposed to be more accessible to the average person, which is called The Intelligent Investor. However, both of these books are very complicated, and the fact that they were written in the 40s and 50s makes it even harder to read it because of some of the English that is used in those books. But he is a fantastic person to learn from, and the reason why I think he's so fascinating to learn from is because he was also the teacher of Warren Buffett. So Warren Buffett read The Intelligent Investor as a young person and used it in order to start his investing style. And that investing style that Benjamin Graham was teaching and that Warren Buffett was adopting early on in his career was what became known as cigar butt investing. And essentially this is where they bought sometimes terrible businesses, sometimes 100 of them at a time, and essentially they found these businesses that were priced at below their net tangible assets, and they were called cigar butt investments because you were finding cigar butts that had one last puff in them. So it was just as if the business was a complete ruin, but they were priced at a price that was below the value of the inventory and the assets and the machinery that the company had. So there was a likely chance that there could be, say, an acquisition that could have bought that business and you could have made a quick premium. So that was the style that Benjamin Graham was able to successfully use throughout his life, and Warren Buffett used it in his early years. And because he was learning from David Dodd and Benjamin Graham, which were the two authors of Security Analysis, he wanted to learn from Benjamin Graham. So he figured out that, or he found out that Benjamin Graham was teaching business or teaching investing at Columbia Business School. So he decided to go there, and that was how Warren Buffett started his investing career. So The Intelligent Investor is a really good book. I've read it a couple of times. It's excellent if you sort of if you already have a basic understanding of investing and you want to take it to the next level. It's a really, really good book. Security Analysis is crazy. Don't do it unless you're a maniac. But that I'm part way through it. I'm not completely through it yet because it's massive. But it's excellent as well. It goes just way further in depth than The Intelligent Investor. But The Intelligent Investor is a fantastic book that I think every value investor should read at some point in their life. Even though a lot of the lessons are not that applicable today, a lot of what he says about bonds, and there's a bunch of things in there that are just not relevant today, but the core foundations of value investing is very relevant today. His teachings about looking at management and looking for companies with competitive advantages and looking for companies that can be bought with a margin of safety, making sure that the price you pay is a good price relative to how much cash you're going to get out of that company. Those are some of the great lessons that we learned from Benjamin Graham. In terms of things that I dislike, I mean, his cigar butt strategy is not one that I think anyone can do well today, just because any company, basically what he was looking for was companies that were priced below well, like below their cash. And these companies he was able to find them because he had to literally look through books and just look through all of the stocks. But now that we have the internet available to us, and there's stock screeners, and as soon as a stock becomes that cheap, it could be instantly alerted to a bunch of fund managers. Those types of stocks I don't think are possible to find, and I think that that's why Warren Buffett changed his strategy over his lifetime to become more of an investor in businesses that are really great at the core and that over the long term are going to continue to thrive. So we'll let that transition us into the next person, which is, of course, Warren Buffett. Now, Warren Buffett, as I said, he followed that same strategy as Benjamin Graham in his early years, and then over time shifted his strategy to becoming what it is today, where he essentially invests on 4 key pillars. He invests in a small number of businesses that he thoroughly understands, like something like Coca-Cola, where even as a child, he was going around and selling Coca-Colas door to door. So he had a close relationship with the company, and he knew what he would do. Something he did was he would go to the sort of the old style vending machines. I'm not sure what they were called, but there would be bottle caps in the bottom of the vending machines, and he would collect them all and see how many of them or which company had the most. And he would see that Coca-Cola always had the most number of caps, which meant that Coca-Cola was the most popular the most popular type of drink at those locations. So he had a very close relationship to the businesses, and then he would look for businesses that had an intrinsic competitive advantage, and that they had a management team that was transparent and honest, and had a lot of skill at investing within the business and managing debt, and he would look to buy them at a cheap price relative to their cash flows. I think Warren Buffett is one of the best people to learn from, because especially now, he's very good at breaking down the complex ideas of investing into really simple concepts, and his interviews online are some of the greatest ones. I'll leave a couple of links down in the description below. His interviews are great, and another place that you can learn from him that's very excellent is through reading his Berkshire Hathaway letters to the shareholders. So these are free online, or you can buy a book that sort of consolidates them and puts them into categories of valuation, management, corporate governance, that sort of thing. But you can just read them for free online, and there is a ton of useful value investing information in there based on his real life experience going through from 1964 until now. So that's where I would recommend that you look and learn about Warren Buffett. And speaking of Berkshire Hathaway, we've got the third person on our list, which is Charlie Munger. And Charlie Munger is Warren Buffett's partner. And Charlie Munger is actually, he's very, very focused on those 4 key pillars. And he's one of the people that influenced Warren Buffett and helped him to sort of shape his investing away from buying these terrible businesses that were really cheap to buying great businesses that were pretty cheap at a fair price. For me, most of my learning from Charlie Munger has been from sort of watching interviews online. I haven't really looked into his books or people who have written books on his strategy, but most of what I've found online has been really, really helpful. And he as well is good at explaining and breaking down those complex ideas into simple categories to make it accessible for the average investor. The next person on my list is Phil Town. Now, Phil Town is another very successful investor, and he's been investing or following the investment strategies of Warren Buffett, and he's had a lot of success at it, to the point now where he's teaching people how to follow that strategy as well. And I think his work, his books, Rule 1 Investing and Payback Time, and there's a few others in there. Those books are very, very good for the absolute beginner. It's a good way into the investing universe because he oversimplifies the concepts of investing. And there's 2 parts here. I really like the way that he oversimplifies those things. But he also needs, it's also, you've got to recognize that he's way oversimplifying it. And it's certainly not to be taken as that is how you should invest. So I'll give you an example. He breaks it down into those 4 key areas, but he has specific formulas for you to calculate each of those areas. So for example, with the calculating an economic moat, he has some numbers that he wants, and he looks for 10% per year and growing over time. And if a company achieves all of those, then he says that it has an economic moat. And that's definitely a good core component of it. But you need to go further. You need to understand the business. You need to be able to do a qualitative analysis and compare it to the other businesses in the industry and see if it does actually have anything that the other companies don't have. So I think he oversimplifies it, which is good for beginners, but you should then go from that and start to dive deeper into those 4 key areas, which we all follow. Warren Buffett follows them, Charlie Munger follows them, Phil Town follows them. Everyone follows them because they're the best key pillars, but you need to go deep into each of them and learn exactly what you need to be looking for. And ultimately, you need to just understand the businesses thoroughly, because if you understand a business thoroughly, then all of the other parts seem to just fall in line. So as I mentioned, you can learn from him from his books, and you can also learn on his YouTube channel. He has quite a big YouTube channel, and he puts out a ton of great content on there, teaching people sort of some of the strategies and explaining them a little bit further in depth. But the next person on my list is Ray Dalio. Now, Ray Dalio has a very different strategy to these other investors that I've just mentioned. Ray Dalio is very much about diversification. He uses systems and algorithms in order to calculate the probability of certain events happening, such as a recession, and based on that, he adjusts his portfolio. And he even has what's called an all-weather portfolio, which he says can perform really well in any economic conditions that are occurring. And he's been very successful over his lifetime using that strategy as well. And I don't so much follow Ray Dalio for his strategy. I like listening to what he says about stocks, but I mostly focus on him for what he teaches about life. So he has a book out that's called Principles, and it basically teaches you how to overcome adversity and to continue to push forward and become successful. And I find that part of his teachings is incredibly valuable, because he talks about how he went from a very young age and being this kind of party animal kid, and how he structured himself and started to push towards goals, and how over time that was just an exponential upward curve of him being extremely successful, to the point now where he runs he built the biggest hedge fund in the world. So I would definitely recommend his book Principles, and he has another book about the debt cycles that is a lot more complicated, but that's also a good book that you should read if you're interested in learning about how economic cycles work. And he even has a video on YouTube actually explaining, I think it's about a 30-minute video explaining how the economic machine works and what are the different cycles, and what does the Reserve Bank or the Federal Reserve, what do they do, and how does the role that they play impact the stock market and the economy. So if you want to learn about that, I recommend it's an excellent video as well. But the last investor I've got here that I like to follow is Joel Greenblatt. And I think he's a little bit less well known, definitely compared to Warren Buffett and Charlie Munger and some of those, but his stuff is excellent as well. He's been a very, very successful investor, and the reason why I like his stuff is because he is very focused on the kind of investing that I like to do, which is very focused on cash flow and cash flow yield. How much cash are we getting back, and how much are we paying for that? And what return are we getting on that? And he has a number of interviews online. He has a book as well. I haven't read his book, but I've just watched a lot of interviews and sort of speeches that he's done online, where he talks about how to invest in businesses and what he thinks is going to happen in the markets and that sort of thing. And his stuff is great. And he is very good at, like Warren Buffett, he's very good at breaking it down to simple concepts, but still keeping it sort of complex enough that you sort of appreciate that you need to do a lot of research in order to come to the conclusions that he's drawing. So he's another one. He's the last one. And if you want to check him out, I'll leave some more stuff down there in the description below for your further viewing pleasure after watching this. But that's basically it. These are the people that I like to follow. And I think that if you follow these guys and you listen to what the differences is between their strategies and what they're teaching, whether that's about stocks or life, you can sort of form your own investment philosophy around that, and you can form your own life philosophy around that. And I think that's really important to becoming a successful investor. But if you did enjoy the video, make sure you leave a like and let me know your thoughts down in the comment section below. What are some of the investors that you follow closely and that you like to mimic in your own investing philosophy? If you're new around here, of course, hit subscribe and hit that notification bell so you don't miss out on any of the future notifications. But I hope you guys have a great day, and I'll see you in the next one.